The NASDAQ is open for trading right now, and Ondas Holdings Inc. is currently sitting at $5.96, reflecting an intraday movement that's essentially flat, showing 0.00% change for the day so far. The first thing you need to grasp about Ondas, which most people miss when they glance at the ticker, is that the recent stock price action isn't about their legacy wireless network segment. It is almost entirely dictated by the narrative unfolding in their Ondas Autonomous Systems division. The flatness today is deceptive because the stock has been an absolute pressure cooker, especially over the last few months, and that high volatility, which saw a 52-week swing from a low of $0.57 to a high of $11.70, is a direct result of aggressive strategic moves in a hyper-growth industry. The expectation you'll hear in most chat rooms and casual investment circles is that Ondas is just a small-cap wireless tech player with some drone aspirations, a classic low-float, high-beta speculative stock driven by retail momentum. That common ground belief overlooks the intense institutional buying activity we've seen, particularly the significant increase in positions from firms like Vanguard and others, which suggest a far more calculated interest than simple retail speculation. What's actually happening is a company frantically executing a roll-up strategy in the autonomous systems and counter-drone space, specifically targeting high-value defense and critical infrastructure applications. This isn't a slow burn, it's a series of lightning-fast acquisitions, the most recent being the definitive agreement to acquire Sentrycs, a global leader in counter-UAS cyber technology, which was announced just a couple of days ago, and before that, a controlling interest in InSight intelligence sensors. These are not minor, quiet additions. These are highly strategic moves that instantly expand Ondas's global reach to Tier 1 defense and security agencies across 25-plus countries. This aggressive expansion, particularly into the defense sector with combat-proven technology, is the real fuel driving the volatility and the long-term potential for a much higher ceiling than the current price suggests, provided they can effectively integrate these moving parts. The immediate stock movement and trading volume tell a story of consolidation, or perhaps a pause for breath after a series of major announcements. The volume today is still quite high relative to its historical average, indicating that a lot of shares are changing hands even as the price holds steady. The immediate reaction to the Sentrycs announcement, which happened pre-market the day before, saw the stock spike, and now it appears to be digesting that news flow. High trading volumes on flat or slightly down days following massive spikes are often indicative of profit-taking from short-term traders who got in early on the news, which is normal, and helps to reset the stock before the next potential move. When you look at the daily charts, the recent upward momentum since the 0.57 low has been almost parabolic, driven by a string of positive developments in the second half of the year, including strong Q2 results where revenue surged six-fold year over year. The technical setup right now is one of a highly volatile stock that is trading well above its long-term moving averages, but the recent pullback from its high is testing investor conviction. The $6 level is acting as a critical psychological and technical pivot point. A sustained break above it on significant volume, perhaps catalyzed by news of the Sentrycs acquisition officially closing, would confirm the resumption of the uptrend. Conversely, a drop below the recent intraday low could signal a deeper correction. What is absolutely clear is that Fidelity clients and users on platforms like Robinhood and SoFi Invest, who are engaging in self-investing and looking for high growth potential in autonomous systems, are paying extremely close attention to the daily swings in ONDS, as its trading range is huge and creates both massive opportunity and massive risk. It's the type of high-risk, high-reward stock that demands active management, not just a set-it-and-forget-it approach typical of something like a Schwab Intelligent Portfolio.